So today, we're going to be learning how to use the HECM loan to build and fund an ADU as a strategy. So first and foremost, what is it? Well, it's an acronym for Home Equity Conversion Mortgage. What that means is that this is an FHA insured line of credit. Now, unlike traditional home equity lines of credit, a HECM line of credit can never be reduced or revoked, regardless of the value of your home. On top of that, the unused portion of the line of credit will actually grow over time. So why would you use a HECM loan for an ADU? Well, what this strategy does is this fills in retirement gaps. Now this is important, especially when you're building an ADU, because there's no payment required, not before, during, or after construction. What this translates to is once you finally complete your ADU, once you put a renter in there, that's pure cash flow. Now remember, the cash out from a HECM loan can be used to build an ADU on your primary residence, on an investment property, or multiple investment properties, or a combination of these things. It doesn't matter if you want to build a converted garage that's attached or detached, or if you want to build a standalone detached ADU. You can do any of these things or all of these things depending on where you could build your ADU on your property. So let's look at some retirement gaps today. So everyone, I'm sure, remembers the market drop in 2007, or even more recently in the beginning of 2020. What if you lose a spouse? The loss of their Social Security or their pension, or even worse, both of those things, can be catastrophic financially at that time. You're going to have unexpected healthcare costs as you age. Now, lastly, the number one thing that has prevented people from reaching their retirement goals is funding adult children. So if you found yourself doing that, as a father myself, I understand, if you find yourself doing that, this is a great way to make up those income gaps. So who's eligible? Well, first of all, you have to be at least 62 or older. Now, if you're watching this and you're not 62, you could think about this for your mom and dad, because remember, they can do a HECM loan on their property and they can build the ADU on your property, which will not only increase your cash flow, it could potentially give them a great place to stay while they come and visit the grandkids. Now, you do have to have some equity, but that's more of an individual conversation. So here's an example of using the ADU and a line of credit as a strategy. So let's assume you've got a paid off house. Now keep in mind, there is still a strong possibility of being able to do this even if you have a mortgage, but that's another conversation as well. Now let's also assume you've done the research and you know that you have room to build the ADU. We're going to assume the average cost of an ADU of about $150,000 to build it. We're going to assume that the ADU is going to rent, depending on where you are in California, for somewhere in the neighborhood of about $1,800 a month. And we're going to assume that the remaining line of credit will be left alone to grow for a given length of time. So at this stage, you're 62 years old, you've got a $765,000 house, your line of credit starts out at about $210,000. That's to be used on an as-needed basis, but if you leave it alone, over the next 10 years, it's going to grow to over $315,000. And if you left that alone for the next 20 years, that would grow to nearly $500,000 in an available line of credit to you to use on an as-needed basis. Now remember, at this point, you're now 82 years old, and that line of credit is available to you regardless of the value of your home. So what does this translate to as far as dollars and cents? This means you've got a $150,000 ADU built. It's cash flowing about $1,800 a month, and that should go up. You do not have to make a mortgage payment. That means you have positive cash flow the whole time. Now, you can make a mortgage payment if you want to. In fact, you can pay as much or as little as you want to, but you're not required to at all. You've got a line of credit over $200,000 that could potentially reach nearly $500,000. So in closing, the HECM loan, use it to build an ADU for cash flow during retirement. Set up the line of credit as early as possible and allow it to grow for as long as possible. You have flexible payment options, and this loan is non-recourse, meaning you can never owe more on your home than it's worth. And what that does is provide security for you, your heirs, and your spouse. So if you have more questions or you'd like more information on how to use the HECM loan to build and fund an ADU, give us a call at 866-407-4247 or visit us on our website at www.goldenaf, that's A as in Apple, F as in Frank.com, and visit us on our Contact Us page. Thanks for joining us today, folks.